Listen, there are 33.2 million business owners in the U.S., right? Out of our offices combined, 1 out of every 6 businesses are LLC, and we know that you're not properly using your LLC. So we're going to discuss the 6 things to avoid before starting your LLC or before you start your next LLC. Stay tuned. What's going on, y'all? It's another episode of Minding Your Biz, where we talk things, all things biz. I'm one of your co-hosts, Dr. BlackWealth.
All right, it's your girl, Miss Fabfinancial.
What's up?
What's going on?
We talking about these mistakes, y'all. The 6 mistakes, 7 mistakes y'all need to avoid before starting y'all LLC. All right, so let's dive into it. Right, so like I said, between our offices combined, 1 out of every 6 persons probably a LLC or should be a LLC, don't know it, are LLC and don't realize it, right? Or don't know what to do. So we identified at least about six things you should want to kind of consider before starting your next LLC or if you're about to start an LLC. So the first one is like not knowing the type of income you are about to receive, right? So if you know what you're trying to do as far as a business, then you will know how you want to receive your income, right? From the IRS standards, there are 3 types of income. Mm-hmm. One of them being ordinary income, which is basically like earned income. So if I work a job, W-2 job, this is the income that we work for from labor, from actual labor, right? The second type of income is passive income. This is typical for real estate investors. So this will be if I have a rental property and we have a renter in it and they're paying me rent. That's passive physically doing income. Something.
I think that's the issue. People get confused a little bit.
For sure.
With ordinary and passive.
Like
they're like
you got to work in ordinary labor. This is like think hard labor in whatever capacity.
Even if sometimes people think, well, it's automated. I got it on ClickFunnels.
Right, but you still work.
Right.
To do,
sometimes you put labor, but passive meaning that you don't have to touch it. You know what I mean? Like it comes organically. If you buy, and real estate is a really good example of that because you did buy the property, right? But you didn't make the house. Right. You didn't put the house together.
Right.
Someone pays you just to live there. And that is kind of the basic principle of passive, right? So or, you're talking about portfolio or going to the next type of income. But those 2 key differences between passive and ordinary, really, you need to understand the 2 so you can figure out, hey, what's the next step?
For sure. And that's a good point, too, because most people think like, hey, well, I just set up my little Etsy shop or whatever. So I don't really do too much, but we make money on the side. How is this taxable? Well, it's still earned income because you put thought processes, you built up the website, you had the third-party merchant account, somebody collecting payments, somebody shipping something out to them, right? And it's earned income. So labor.
And I think another good way to think about it is do you live off that income, right? So I think that's another good way to kind of also check the box. Do I use this income to live, eat, and breathe? Now, when you have passive, sometimes that's like extra, right? Mm-hmm. Most people don't really live off passive income. Mm-hmm. It's usually like building wealth. It's usually extra. And now, of course, there's outliers. I know people going to be in the comments like, nah, because I have a... But traditionally, passive income is usually something you don't live off of. You usually are living and paying your bills off your ordinary income.
It's almost like disability. You can just wake up and get a check.
Right.
All right. And then so the last part is portfolio. Yeah. So portfolio income this is where we start to pay like capital gains. So if we are an investor, think Warren Buffett, right? We own, sell stocks, buy, sell stocks, or if we buy property, sell a property, we get capital gains off that. Mm-hmm. That's portfolio-based income. So understanding those 3 different types of income helps you understand, right, how long you're going to be a LLC, because not that you won't need an LLC, but maybe it's how long you're going to stay a LLC depending on how intentional we are about making the money we making.
And keeping it separate, right? So that hey, I make money doing this thing. Yeah. Like you said, those 3 different types. Yeah. And that can help you identify how you operate in your LLC, how you operate every day in your business based on the income that comes in. Yeah. Because like you said, we identify, hey, there are some things here. People have LLCs, but they're really not optimizing them. They're usually not using them right now, not paying themselves properly, or they're not structuring it right? When they buy said house, they're still using their social security number and then they want to switch it back, right? So it's being intentional from the beginning. Okay, guess what? I'm about to buy this passive income. I'm about to buy this property. Do I have my EIN number set up so I can give it to the lender or the title company or whomever is doing the closing? When you put in that offer, you're intentional from jump. Okay, I'm buying it under 123 LLC, right? Here's the EIN number. Here's this. I'm buying it under my business, and I have an LLC for this said property, right? So identifying from the beginning who you are, what you are, and then how you operate in that space.
For sure, which you just outlined steps 2 and 3, right? So understanding the EIN, and then 2 would be, make sure you set up your LLC before your real estate property, which is a good point, right? Because most people will buy their property in their name, right? And then figure out like, oh, I can use it for business purposes, or, try to do the quick claim deed to switch it. Yeah. Right. And sometimes you might get, sometimes you might have a roadblock with your mortgage, right? Depending on, because sometimes the mortgage company might say, hey, you got to buy this property out. Yeah. It depends, right? Yeah. So everything is scenario or situational based. For sure. So you definitely want to talk with an advisor about it. I guess one thing we did forget to mention when it comes to the different income, another key differentiator will be for taxes. So typically in most cases, passive income, you don't pay self-employment taxes on it. Yes. Right. And so earned or ordinary income, if you do it by way of LLC, you do, right? Yeah. You're paying that 15.3% self-employment tax, right? And then of course with the portfolio income, that's taxed at a different bracket with long or short-term gains. And that's typically used if you use the Schedule E. So if you have an LLC and you put the income on the Schedule E, that's how that's how you report it as passive income versus the Schedule C for those of you who are in that space. For sure. Yeah. For sure. So then that leads us to the fourth thing, right, which is not knowing the proper forms that you need to use as a business owner, right? So as a LLC, not just a business owner, as a LLC, there are a few type of forms you need to be familiar with beforehand. The first one is called a Schedule C, right? So a Schedule C is the form that is attached to, it's a letter form that's attached to your 1040 that goes on your personal tax return that breaks down how much money your LLC made and the expenses that your LLC had. Yeah. Right? And so this form is used for sole proprietors and LLC, single member LLC. Yeah. We have a video for that, y'all. Just very key, for sure. The second form will be a 1065. So a 1065 is used if we have more than one member or manager that owns a LLC. Yes, right? Member that's very, very important. Right. I know so many people who have LLCs and go, I have a partner, and they're the only ones reporting the business income. I'm like, well, where's the partner? And they're like, they file, and it's two Schedule Cs. And I'm like, what? Happening? They're like, well, we didn't know how. The 1065 is how you report that properly. 1065, and that's a separate tax form, right? Those are actual business taxes. And out of that, which leads me to my next form, it gives you a K1, what's called a K1. So basically, the 1065 says, hey, me and Farrah has a partnership. So our taxes for our business, every expense associated with it will go on this tax return, the 1065. Yeah. And then from that, it's going to give us, each of us, a K1 that says, hey, she has 50%, I have 50% ownership in this business for whatever income or loss we have. Right. So keep in mind, though, 1065, you still are subject to self-employment tax unless it's real estate. And there's ways around that. But the next one will be a W-9. So the W-9 is key because if you are 1099, like somebody's paying you and you get 1099 income, you need to fill out the W-9 so that you can receive your money in your business name. Yes. That's one way. The second is you need to have your contractors or people fill out W-9s when you pay them over $600 or more, because by the IRS, you're required to issue them a 1099. Yes. Right? So if I have a business and like we got a accounting firm, if I hire tax professionals on a seasonal basis, typically I'm commissioning them. Yeah. So now every year I got to issue them a 1099 based off the commissions that they earn. And you need the W-9 to fill out the 1099. So for especially for real estate
investors, developers, when you bring on a new contractor, a new subcontractor, make that a part of the agreement. Hey, I need you to fill out this W-9 so I can 1099 you.
Yeah.
You know what I mean? Because that's your receipt. If the IRS audits you behind and you're like, yep, I paid X, Y, and Z 50 grand, but you don't have the W-9 or the 1099, they can strip that. They can say, okay, well, we're not going to give you credit for this 50,000.
Mm-hmm.
So that's also possibly. That's the option. So you also want to protect. You also want to protect you. I mean, because you can prove that you paid them, right? But that's what you're supposed to do.
Yeah, you're right.
So we're talking about stuff that you're supposed to do.
For sure.
If you forget or you have a situation that's different, but decent and in order, that's what you're supposed to do. You're supposed to get new people coming in as contractors to fill out that W-9. Also to keep track of who's working for you on a contracting basis, right?
Yeah.
Better bookkeeping. This is not performative. We are doing the things you need to do to be a business owner. Yeah. That's what we want to talk about, being a business owner, decent and in order.
Yeah, for sure.
That's right.
So then the fifth one will be knowing how to reimburse yourself, right? Yeah. So if I have a business, I'm an LLC.
That's a big one.
Sometimes I might use my personal card to buy something that's in relation to my business, right? And so we have already established that you got a bank account, business bank account. You got where all your business income and expenses are coming out of there. But sometimes you might have something that you got to just, let me just take care of it because I got it on the personal side. So how do you properly reimburse yourself? Well, you do what's called an accountable plan. Basically, it's a plan or document drawn up from the company that allows you to say, hey, I'm going to reimburse. I'm reimbursing myself from the business for the expense that we had for whatever personal expense that we used it for. So it's a paper trail that documents, hey, I spent money on my personal card, but now the business is going to reimburse me. So it's an expense to the business. I get my money back personally, and it's expense on the business when I do my taxes.
For sure. That's definitely the proper way to do that, but I know some of y'all ain't gonna do that. So what you should what you should do, right, is like every week or every month, go I looked into my personal checking and just transfer the money. Just transfer the money over there and reimburse yourself, but just notate it. You know, that's the proper way that you should do it, right? You should have a plan. But I know y'all, so just, if you're gonna use your personal, just send them.
Since we talking on transfers, that leads us to our last step, right? Not knowing how to pay yourself. So as an LLC, this is a huge concern. Most people don't understand how the taxes are then used or how to pay yourself. So when we LLC, we just need to transfer money. If you want to take care of you're like, hey, I left my job. The business is my primary income. I still got to pay my mortgage or rent, stuff at home, whatever that looks like. Well, you're going to calculate what that is.
It's called a budget. Budget. You budget. Just budget.
I like to call them spending plans.
Right, sure.
Give your money some place to go every month. But you're going to say, hey, listen, every month to survive, we need $3,000. So every 2 weeks, I'm going to send myself $1,500. You're going to transfer that money. But wait, it doesn't end there. When you transfer the money over at the end of the year, we still got to calculate how much money you paid yourself because technically you still got to pay taxes on that. Well, not technically, actually, factually, you're going to pay taxes on that. So when we do the Schedule C, which we already discussed, that money will be a part of your profits in the business, which you will pay taxes on, in addition to if the business was profitable. Right? Now, there are other tax strategies and plans we can do to drop your taxable income, but that's how you pay yourself.
And you cannot write off your salary, your expenses as a sole proprietor or a single member LLC. I've seen it on people's P&Ls. They're like, well, I paid myself $20,000. I want to put that as an expense. And I'm like, well, it's the same.
Oh, yeah.
So they'll be like, well, I want to minus 60 grand out of the business. I paid myself salary. I said, well, you can't do that as an expense on the Schedule C. You can't do that. You get the money.
I know y'all
the profit,
just don't know. Y'all don't know.
It's so yours. You can't do that, y'all. Yeah. You can't have it a line item like I paid myself 60 grand. I want to make that an expense.
Yeah.
Out of what I made.
Yeah.
Mm-mm.
So listen, if
Can't do
you're
that.
about to start your LLC, if you got an LLC,
Yeah.
you got a question about it, right? Go ahead and schedule a call with one of our offices. Click the link below to where one of us will reach out to you, or you reach out to us, so we can get you on and ready to go.
That's
if
right.
you like these type of videos, make sure y'all like, share, comment, and subscribe so we can continue to make more of it.
That's right. What he
Right.
said.
Don't forget to keep minding your biz.
Mhm.
We'll see y'all when we see you.